Given all the major precious metals market news of late, this will be the first of a two-part market update for this final week of late July 2020. We have some record-breaking data insights to cover later in this video, but first, we'll begin with some popular bullion product price premium expansions of late. Hello there, this is James Anderson on behalf of SDBullion.com, and today we're going to be covering a few factors on why this burgeoning precious metals bull market is already dwarfing any others that came before it. Early last week, Tuesday, July 21st, 2020, we sent an email to our SD Bullion client base notifying them that the silver spot prices were on the move, having then passed 21 fiat Fed notes per troy ounce. We also informed those on our SD Bullion email lists that a then breaking emergency U.S. Mint conference call was about to occur regarding a continued viral bottleneck at the West Point Bullion coin production facility. Well, at the start of this week, Bloomberg learned further details on this emergency U.S. Mint meeting, and here's what they reported. U.S. Mint has reduced silver gold coin supply to purchasers. Complex can't make gold silver coins at the same time. Document. Mint is now asking APs for demand forecasts. The U.S. Mint has reduced the volume of gold silver coins it's distributing to APs as the coronavirus pandemic slows production, a document seen by Bloomberg shows. The Mint's West Point complex in New York is taking measures to prevent the virus from spreading amongst its employees, and that will probably slow coin production there for the next 12 to 18 months, the document shows. The facility is no longer able to produce gold and silver coins at the same time, forcing it to choose one metal over the other, according to documents which was presented to companies authorized to buy bullion coins from the U.S. Mint last week. The West Point facility is one of the primary sites for bullion production, along with the San Francisco Mint complex, which only partially reopened in May after shutting down early in the year. During the 2019 fiscal year, the U.S. Mint overall produced 18.8 million ounces of bullion, according to its most recent annual report. A spokesman for the Mint didn't immediately have comment. Quote, "The pandemic created a whole new set of challenges for us to manage," the Mint said in the document. "We believe that this environment is going to continue to lead to some degree of reduced capacity as West Point struggles to balance employee safety against market demand," end quote. The U.S. Mint, which makes gold, silver, platinum, and palladium coins that are sold through a network of distributors, has been producing commemorative and investment coins at a lower capacity since reopening the West Point facility and imposing social distancing earlier this year. The cuts are yet another blow that the pandemic has dealt to American coin supplies. Just last week, the Mint urged Americans to spend their pennies, nickels, dimes, and quarters because the pandemic has cut in-store sales purchases and slowed the pace of cupronickel coin circulations nationwide. The reduced allocations are also coming just as investors are clamoring for precious coins. Global uncertainty over the pandemic has driven silver and gold prices to multi-year highs, turning coins made from the metals into a retail safe haven. The premiums for some coins over spot of the metals have surged to record levels. To cope with demand, the Mint is now asking dealers to provide their 10-day and 90-day forecasts for demand for the first time ever. That's going to allow it to decide what products to make, as some are more labor-intensive than others, according to the document. If the Mint decides to make 1/10 of an ounce of gold, for instance, it must cut production of American Eagle silver coins. Well, it's easy to guess with current bullion industry trends that the authorized buyers of precious metal bullion products from the U.S. Mint will be asking the U.S. Mint to focus on producing the silver Eagle coin over all others. There will likely be no more fractional gold Eagle coin pieces for the remainder of this year, 2020. So my suggestion is that you should expect new 1-ounce gold Eagles and silver Eagles to remain coming out of the U.S. Mint, and that is what they will remain focused on for the remainder of the year. The U.S. Mint is on pace to have a strong year in bullion coin output when compared to the last few, and that's even with the viral shutdowns and the slowdowns with social distancing in their manufacturing process. The problem is that there's simply not enough bullion products to meet ongoing demand. The case in point is the most popular silver bullion product, the 1-ounce American Silver Eagle that we're talking about here. You can see on this chart the recent rebound in premiums with this news, as we have an increase in spot price as well along this time frame. Virtually all American Silver Eagle coins are being bought with prices now in the 30s per troy ounce. Remember too, both the American Eagle and Silver Eagle coin reverses, or the backsides, are being redesigned for the year 2020. They will have new anti-counterfeit features at long last. If you want to see some artist redesign entries for these reverse changes, I'll leave a few links in the comments below for you to go check them out. Now, with this anti-counterfeit value add, I'll go so far as to suggest that seigniorage fees on both of these most often bought by sales volume bullion coins will be rising again in the year 2021. No official redesign has yet been selected, and that is simply my speculation that they will be rising in price. The last time the U.S. Mint increased premiums on American silver Eagle coins was right around the same spot prices that we're at now, but that was back in early October 2010, going from $1.50 per ounce over spot to $2 an ounce over spot for brand new silver Eagle coins coming out of the U.S. Mint. That was around the same time, allegedly, that JP Morgan and other net short commercial banks got run on by silver longs, extending all the way into the following year. End of April 2011, the price of silver ran from mid-20s up to $50 an ounce, essentially doubling in about a half year's time. Remember, too, that the last major upside run in silver was a response to QE1 and 2, the years 2008 through 2011. At the time, there were some pretty large inflows into silver ETFs, but now, with infinite QE policies ongoing, the net inflows to silver ETFs are record-breaking. Stick around if you want to see that. I literally looked the other day, and just to give you and myself an idea at the speed of which things are moving now in the silver market, I have silver's QE1 spot price recoup. That took about 496 days. The infinite QE version, this 2020 recoup from the crash of mid-March in the year 2020, it took about 168 days to get back. That's nearly 3 times faster. And again, we're sitting in a shortage scenario like we were last time. And we've blown well beyond where we once were recently in spot prices of late. Surely along the way there's going to be corrections, retracements, simply climbing the bullion bull market of worry. But look for what follows once $2,000 an ounce gold becomes support, $25 an ounce silver becomes support. Moving onwards to the unbelievable gold ETF and silver ETF inflows we've been witnessing. After I finished late last week's SD Bullion market update, I ran into this humongous fund flow chart, and it just covers 1 week of time, going into the world's largest derivative ETF called SLV. About 700 million investor funds in only 5 business days chased into that fund. It's the same fund that's looked after or custodianed by alleged RICO criminal precious metals trading unit for JP Morgan. Another time we'll go through why SLV, in my opinion, is a poor choice, not merely for the long-term, medium-term, but even for short-term trading. But we're not going down that rabbit hole today. I want you to think about that 2010 to 2011 run in silver spot prices in the context of today. Look at how much more investor flow is running into this major silver derivative today versus back then. Back then, we saw a slow, steady rise. Today, it's like an exponential ramp, mimicking the spot price of late. Further, let's look at the other 2 major gold ETF fund flows over the last 1 week and a couple days of time. This top 10 list here is ranking the largest investor fund flows over the past 7 trading days. The top 3 of 4 of these ETFs are the GLD, IAU, and SLV, with a combined over 4 billion fiat Fed notes chasing into their coffers in a smattering of days. So not only are current investor bets on hard money bullion and derivative proxies hitting many record levels of late, so too is the investor's gold and silver hive mind. Just your average gold and silver bull on the street, they are well conscious of the brief mid-March 2020 spot price meltdown, rebound, and now outperformance. They are likely also, as best as any of our brains can fully fathom, likely also aware of the unparalleled global fiat currency creation bailout fest that's since sprung off central bank keyboards. Many people's confidence is shot. Investors, both small retail bullion buyers, high net worth family office estate money managers, hedge funds, financial institutions, you name them, Many of them are mostly and increasingly betting on bullion's price and value to rise in the coming months and years. Stay tuned for late tomorrow. We'll have part 2 for you then. Till then, all the very best to you and yours. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.